Hi, I'm Pattu from Cal, and in this video, let's talk about the mood of the stock market before the Lok Sabha 2019 elections. And few people have asked me, I am sitting on some money. I have a few lakhs of money to invest. What should I do? Should I invest now? Should I wait for things to stabilize? And so on. So I have talked about this in another video, but I want to use this question as an excuse to show you something. So not all stock market crashes or not all index crashes are a unhappy event. There are some indices which are meant to crash and which hopefully would crash after the Lok Sabha election results are announced on May 23rd. One such index is the India VIX index. This is the volatility index of the NSE. So what they do is they study the bid price and the ask price of the NSE futures and options market, and based on the difference between the bid price and the ask price of the Nifty contracts, that is the futures and options contracts in that in that segment of the NSE, they find out or they measure the volatility of the stock market for the next 30 days. So it's a near term or a short term volatility indicator. It is so if the India VIX goes up, that means that the volatility is high and the market could be down. And if the India VIX falls down sharply, then the market could be moving up. So it's a contra indicator in that sense. How the India VIX is calculated is extraordinarily complex. It will take quite a while to understand how it's doing. You need to have some basic knowledge about how futures and options work. I am not an expert, so I do not understand this calculation well enough to talk about it in a YouTube video where I can explain it in an offhand manner. I do not understand it well enough, so I will not talk. I will not say anything more than this. One thing is intuitively clear is that if you take a stock, I'm not talking about futures and options here. If you take a stock, there will be a bid price for it and an ask price for it in the market between the buyer and the seller. If this gap is small, then the gap between the bid and ask price is small. Usually, it means that there are many factors affecting this difference. One of the factors is that the volatility is low. If the bid and ask price deviates, then the volatility is high. Of course, the difference between the bid and ask price depends on a lot of factors, including the price of the stock, whether it is a mid cap stock, large cap stock, what is the volumes traded, etc., and so on. So all these are factored into the India VIX calculation. It's pretty complex, but this is the whole idea. There is this in the futures and option market, as the bid ask spread is increasing, then the India VIX will start shooting up, and you can assume, or that's an indication that over the next 30 days the volatility in the market would be high. You cannot say anything more than that. You cannot say for the next 45 days what will happen, next 60 days what, nobody knows all that, but it's just a short term indicator that in the coming weeks at least, or at best in the next few days, the volatility will be high. So this is the closing price of the India VIX index. I have downloaded this using my Nifty data download tool. This was created by my friend Pranav Date. The link is in the description box. Of course, if you have used my rolling returns calculator, this is the same engine that's available there also. And Money Control has got an India VIX page. You can Google it. It will give you the real time updates of the India VIX price. So, what do you think those three ovals are? Those are the three elections. That's the 2009 election, that's the 2014 election, and this is the 2019 elections. We have not come to the counting yet. So you can see here in 2009 the market had already crashed because of the Lehman crisis and the global meltdown, etc., and so on. So the India VIX was extraordinarily high. That's the highest in its history. It's a very short history. The history starts only here, and in its very short history, this is the peak seen during the crisis. And when the UPA government was re-elected back, then it fell down. Of course, it did not fall down sharply, but it did go down gradually in steps and so on. And this is the build up to the counting of the 2014 Lok Sabha elections. And when the BJP won the majority, the VIX crashed. It literally dropped down, and the stock market continued to move up. But then it did not. It was not a fairy tale. Obviously, as you know, there was demonetization, GST, other problems, so on, and well, we know where we are. So we have had some volatility spikes in the Modi government, as you can see here, as was the case in the previous government as well. So what is happening now? You can see that as we head towards as we went towards the polls, the India VIX started shooting up. It's more or less close to what it was in terms of value. We are still about we are about 6 days away from the counting, so it's still there. So it can still shoot up a little bit there. The question is, will it crash or will it shoot up forward? Will it come down like it did in 2014, or will it come down more or less a little bit gradually and so on? We don't know. That's something that we do know, but it's very, very clear that everybody is on edge. Everybody is a little worried what's going to happen, who's going to come back, whether somebody will come back or not, or whether there will be some kind of horse trading in terms of MPs and so on. So there's always going to be that problem, and that fear is always going to be there. I'm hoping personally, for the sake of my own money, that there will be a crash in the India VIX on the 23rd. Whoever comes, it doesn't matter who comes for me. I'm completely apolitical. I just hope that the India VIX crashes. I don't know what your opinions are. You can leave them below. So that's the mood of the stock market. It's pretty edgy. It gets a lot more edgier. Usually it's edgy for us, even for a small reason it will get edgier, but it gets particularly edgy just before the build up to the poll and its end. I just wanted to introduce you to this India VIX if you did not know it. Of course, there are futures and options or derivative products created with the India VIX. Now you can bet, you can take a bet saying that the India VIX will crash to that value, or it will crash by 20%, 10%, whatever, after the polling date and so on. You can have a what you call a futures contract with the India VIX, and that's a what do you call it, derivative product built out of this volatility index. That's of course a very specialized product. Unless you are a professional arbitrager, I would suggest don't get into all this. It will be you can burn yourself pretty bad. It will be expensive, not only in terms of losses but also in terms of fees and so on. So don't get into that. But I'm just saying it's available, and it's been there for a couple of years now, maybe little more than that. So that's the mood. Now, coming to this question, I have some money with me. I have a few lakhs. Well, some people make a too big deal of I have a few lakhs. The question is, so one guy told me I have 5 lakhs. What should I do? I have a huge amount of money. I said, wait, what is 5 lakhs divided by your liquid net worth? Liquid net worth means amount of money in mutual funds, amount of money in stocks, amount of money in fixed deposits, amount of money in savings bank, all other investments where you can immediately redeem it. Not real estate investments, not your own home, not your assets like cars, gold, jewels, etc. Excluding all that, 5 lakhs divided by your liquid net worth, what is it? So his liquid net worth was like 2 crores almost, and he's saying I'm having 5 lakhs, it's a huge amount of money. So compared to 2 crores, out of that 2 crores, about 30% of it was already in the stock market in different mutual fund stocks and so on. So that 5 lakhs is it's a small amount of money, in my opinion. So I told him, look, whatever is going to happen, if you are let us say you are going to dump it 5 lakh into the market today, and the VIX does not come crashing down, the VIX actually shoots up, the stock market falls down because there is uncertainty on who's going to form the government and so on. You're going to lose money, fine. But then what happens? Okay, let's consider an alternative. Somebody comes to power, then the VIX crashes, stock market zooms. After 6 months, it comes crashing down. You will still lose money, right? So I think I mean, we should be prepared to face these losses and not get emotional by it and say, "Oh, the day after I invested, it fell down." You may have heard people say this. Oh, on the day of my SIP, the market moved up and so on. That's childish behavior that has to be avoided. If you're worried, just put take 25,000 and invest every week and spread it across until you clear it out. That's the only. But take some action. Don't sit on it. Sit on it. Sit on it. Don't worrying what will happen. What will happen. What will happen. Nobody knows what will happen. There will always be some crisis. There will always be some reason for the India VIX to move up. There will always be some volatility. People will always be on edge. This is just one more excuse. That is the simple truth of it. So let get used to it. Take things in context. I have a large amount of money. It has to be quantified in terms of your net worth. I want high returns. Has to be quantified in terms of inflation. I want to take high risk. Has to be quantified in terms of the actual return that you can expect or the spread in returns. Everything high and low has to be in life has to be quantified with the benchmark. And so, if you're sitting on cash, your benchmark is going to be your own liquid net worth, or you can take the money that's available, that's already in the market. So if the market is going to crash, the money that's sitting in the market is going to face the music first, right? Not so that's going to be a bigger pain for you than the amount that's sitting with you in your SB account. So you should take this in a holistic manner, in the right perspective, and go forward. I always keep saying investing in the stock market is like being the parent of a teenager. The teenager will go out for the first time. They will go out to different places, maybe to the beach, maybe to different parties, whatever. They will come home a little later. They will not be home by 6 p.m. They will come home maybe by 7:30, whatever curfew you have put. Until they come home, we will always feel a little bit of tension and anxiety in our stomach. We cannot go and tell them, we cannot stop them from going out. They have to go out. But until they come back home, we will never be at ease. Investing in the stock market is like being the parent of a teenager. Unless and until the money is removed from the market and being spent for our future goals, there will always be the tension, there will always be some anxiety. You cannot get rid of it. You have to embrace it and live with it. So let's find out what's going to happen. So next week is the 7th anniversary of Free FinCal. I'll try to make some videos of my journey and so on, but I don't know. Let me finish all that before the 23rd, because after the 23rd, people will be busy worrying about who, what, why, and so on. So I'll catch you later. If you have any questions, drop them below. I'll take them up in this week's Q&A. Thank you for watching. Bye bye.